All right, so now let's switch over and do some analysis. We're going to look at 5 stocks in here. So what I did was I looked through our list of stocks and some other stocks, and I wanted to get a sense, being that there's so much out there that talks about how bubbly this market is. Well, when you get in a market that is this bubbly, the likelihood of some stocks that are being driven to the upside to levels that are beyond comprehension, well, it's pretty high. If you kind of look through the lists and you have specific criteria that you're looking for, well, you're going to find them. Well, I was out to find what stocks are just insane. And I think that I found these 5 that are going to be pretty interesting. The criteria is they have to be overbought by our measurement. That is a far distance from the 34-week moving average. Also, they have to have no earnings and little prospect of earnings over the next year or two. And they have to be trading near a high. In other words, they haven't given up too much ground, because we want to have something that's actionable if somebody wants to sell or if they're interested in the short side. We're sharing our analysis of this and the expected pullbacks in time and price. These are not recommendations. We're not telling you to short them. We're not telling you to sell your long positions. We're simply telling you what the highest probabilities are based on the type of analysis that we do. So we're going to show you these 5 stocks right now, and I think you're going to be fascinated by this, especially if you haven't seen cycle analysis before. First stock we're going to open up right here for you to see is Roku. Extremely popular stock, and we all know what they do. They're in the video streaming business. Of course, that business got extremely hot during the COVID time. The stock was kind of languishing down over here, traded as low as this area of about $61, $62 in March in the panic, the COVID panic. And it has since gone up from that level all the way up to a high of 485. I want you to note that the earnings, I checked them so they're not far off, because this was last December since I last updated it. They're pretty much close to this, whereas they're expected to lose money in this year after having lost money last year, and the next year they're not expected to make any real money either. So the PE, well, there was no PE because there's no earnings. The stock is trading, or traded up to, almost exactly the bottom of this fib extension zone. That fib extension zone is created from the last cycle right in here in order to get that projection. You can see each of these fib extension zones, it went through it so easily on the upside as the buyers were coming in, anticipating that, well, everybody's staying home, so you really need to have streaming to keep you busy, and that has really lifted the stock. The stock, now I want you to see the cyclical action. This is a cycle bracket for those of you that are new. That is simply a guide. It's a drawing tool. It helps us understand the rhythms or the flows in the market. So this is a measure of money flow. Actually, there is a half cycle that's in here that I can see that's actually shorter. So what I can do just for demonstration is grab our tool right over here, and I'm just going to go right in here and show you how there's kind of a half cycle that lines up right over there. And those half cycle lows are right over here and right over here and right over here, and then one due out right over here. So we would expect that this stock would pull back and then have another rally and then pull back again sharply. The stock traded up to 485. Our guess is it will trade probably down here to about 380. Now, I said one of the criteria is being overbought. We look at overbought by the distance from specific moving averages. This is the 13-week moving average. This is the 34-week moving average. You can see that what happens is that these moving averages are essentially a magnet. It is very rare that a cycle ends, which is where this nests down over here, without the 13-week getting tested. And for 2 cycles in a row to have that, extremely rare. So with the 13-week coming up here, well, towards that 400 area, and the 34-week way down over here in the 250 area and coming up over here, we're anticipating that the potential upside in this stock now, it's trading at 460, maybe about $30. The potential downside in here is, in our opinion, over $100. So based on this analysis and time and price, we would expect that it would get a decline into March, another rally, and then a decline out over here in towards, and this will show me the date just by highlighting this right here, in towards June. So our opinion is the risk rewards are poor for the upside in Roku, and based on technicals and the fundamentals that I just combined in here looking at it, this is a very high risk stock that is valued extremely high. So that's number one. Let's take a look at number two, which is Twilio, which is TWLO. And here is Twilio right over here. This is for internet connectivity, information services, and you can see the cyclic action in here also. Let's blow this up right there. Don't forget, you can go to AskSlim.com and learn more about cycle analysis. Look at the rhythms in this stock and how they follow beautifully. You could see we put in the momentum conditions, and our momentum indicator is this whole moving average right in here, and you can see momentum is still strong. Right there. Earnings, well, they lost money the previous year. They may or may not get to 17 cents here in 2021. 17 cents. Let's see. What is the PE in there? Well, I didn't calculate it because that's a forward PE. We don't really know it. They may actually have a loss. And the stock is in the 400s again. So this is insanity. Again, you can see that 13-week moving average right over here as it comes and tests it and tickles it lots of times, and the 34 right over here. 34 is coming up to that support area around 330. This is a projection over the next, actually into mid-March, which is where we see a corrective period in the stock market, which takes you down probably to about 373. So the risk rewards, in our opinion, are that we are getting into a corrective period. You can see in here there were about 4 weeks on the downside. There's about 4 weeks left right over here. This one over here was about 4 weeks on the downside. This was a swamped one. This was strong. It only had about a week to the downside, which was really pretty rare. It still moved down from 247 down to about 212, so that was a 15% drop, even in a strong cycle like that. We're anticipating a move down here to about 370. In Twilio, it may very well be under a very strong condition. You can see we're pointing for it to go back up to the highs after that in April-May period. So if you're a bull on this stock, maybe you want to gut it out, sit through that move to the downside. There may be other opportunities for more active traders or self-directed investors when you look at Twilio. Extremely high price, crazy price, very likely to pull back to those support zones. The next one is a rare stock, and that is Rare. Rare is a pharmaceutical stock, and this stock comes up from a price of 40 to about 180 in this year. It's just absolutely amazing. And look at the earnings in this stock. What earnings? The amount of losses, this stock may not make money for years. And you can see in here that this is interesting because these are very strong cycles, as you can see. As these are called right-hand translations, where the peak is made way on the right side of the cycle, and then you have only small periods of decline. So you can see this one had almost no early declines, this one either, but this one is failing from those levels almost immediately. This is declaring the potential for a double top in here. So my opinion is if you get some rally out into here, which is possible, it will likely be a sell. But look at here what came yesterday. JPM downgraded this stock, and that is affecting the stock pretty negatively. Outrageously priced stock in here. Ultragenics, and a opportunity, maybe a rare opportunity, coming if it moves up again to lighten up if you're a holder. Again, we're not making any recommendations. All we're doing is sharing analysis. CRE is a stock that we follow very, very regularly in here. It has multiple time frame analysis in here, and you can see what we call a cyclical harmonics. And that is where you have a big dominant cycle right in there. And this one divides into the minor thirds that you can see right in there. Minor thirds in here. Here you could see you had your first minor third there. I'm just going to zoom in a little bit further so you can see that. And then you had the rally in the second phase going on right over here. And you're getting up towards that really 61.8% fib extension's a long way to go, and probably a big resistance area, about 10 points from from where it is right now. How's the earnings in here? Well, these haven't changed much since September. The stock is losing money. It moves all the way up because it's sympathetic with the semiconductor category. Maybe those earnings are going to improve, but they're going to have to improve a lot to be able to justify this kind of valuation in this stock. I think it's crazy. Our anticipation is that this stock will trade back down to these levels over here. You can see how far it is from that 34-week moving average, and we're targeting down over here to 90 to 100 out in the summertime is the way that really points. You can get a lot of choppy action in here, but I just think that the upside versus downside is not very favorable. And the last one, RDFN, Redfin, you can see right here, absolutely crazy. We know that real estate now has gone nuts. I mean, the prices have gone up. Affordability of home ownership and availability of homes all are very challenging right now. And you can see the cyclic action in here as the stock moves up towards that $100 area, gets up to 97. They don't earn any money. And again, it is just simply the nature of investors wanting to be in areas that they consider potential growth, and regardless of what the price is. And this price is just crazy. So you could see again the 13-week, 34-week moving average always comes down and gets tested, and now look at the distance from that right now. Best case I can make is a pullback to about 75 in here between now and April is what that looks like. We're always looking at time and price, location, and that's how we forecast. Another stock that is just crazy as far as price goes, valuation, risk rewards on this, in our opinion, based on this analysis, are poor. I mean, that the direction, the amount that it could move up versus the risk of it moving down, especially late cycle that it is right now, I think is pretty high. I want to talk about late cycle conditions. We're just going to highlight this for you right in here. Here is late cycle conditions, the last 4 weeks of the cycle. You can see what happened right there. This was another one of those very bullish cycles, but it still lost a lot of ground, 20% or so. Here you can see right in here about 5 weeks to the downside right in there. And now we're coming into the same cyclic period right in here, where we consider it a high risk period. It could make a little more ground, sure, but we think it's going to be in a pretty high risk period based on these patterns that we see in here. Again, you want to learn more about cycle analysis, go to AskSlim.com, go to our workshop page, and there's a video there for you to be able to see how to learn this style of analysis. 5 highly priced, super strong, high risk stocks, and I think I made a good case there. And if anything, I hope it was extremely educational for you.